in will normally comes into the wave 4 of 1 lesser degree, but we do have the medium level here, 1650, so it's likely to dance across that. If we get support on top of the 1672, well then we'll be going high at that point, and we can be looking at 1700 up there. Obviously our long-term projection is up at 2000. So, but coming back to this one moment, support on the 1672 will give us a continued trend to the upside. Dropping out of group 2 here, the 65.72 and the 80 here, the 1665 as resistance here, would see the price back here. Normally the distance above, if that's the case, the normal distance above here will be the distance below, so we could expect this wave 4 to come in to play a little bit larger. Normally the wave 4 of 1 lesser degree, but because we're dealing with a large number, even though it doesn't seem large at this particular point in time, it will look like that afterwards. So we just need to be mindful of that 1665 as a retested resistance creates further downside there. In terms of looking at that here, as you know, we've been on the 30-minute chart here, we've been counting our little 5 waves up through here. Thought I may have had it yesterday, but this little wave 4 here, and this is a typical wave 4, especially when you look at any of these corrections in here, that would be wave 2. See that little wave 4 there? That's the same sort of thing as this. They're just reoccurring patterns. Most markets have, well, each market are like human beings. They're all the same. Markets are all the same, but we're all uniquely different. They have a set of their own footprint, fingerprints, DNA, whatever, and they're normally made up of half a dozen patterns that can be very small, can be very large, and those patterns can get skewed around certain large whole even numbers and so forth. So you need to kind of sort of really settle in and have a look at those sort of things. But this wave move up here is the same as this one through here. So but this sort of gives us a larger picture here. Look, anyway, if we got it wrong, support on 1672 gives it a long. If this becomes the retested resistance, do expect a correction like this here, like that one just here, but across this whole medium level here, 1650. Alrighty, so the Dow Jones as well. The important level here is the 15,300. 303 is always group 1, and support on group 1 separates the thinking, the psychology from the closest largest number, and then would set the tone at the next number, which would be the 15.5. So 1, 2, 3, 5. Yes, 4 is important, but it's not that important when it comes to it. So this is seen as the first high above the level here at 15.3. So we could also expect a wave 4 here to play out. Once completed, then we'll be looking for further upside there. This is how it looks here at the moment. So we were tracking this little 5-wave structure up through here. So it could be complete. But look, while it's above the 15.3, it's supported and the price action is to the upside. So just bear in mind that. Normally support on 15, 303 is the minor trading level here, 300. The sub-level group 1 would be 15.3. 30, and then you can nail that down to 3 again, so 333 if you're if you're getting that close to the market. So it is supported, that's the reality. If it becomes a resistance, then we need to be looking in this space here. So it's basically checking now to get support above this level here. When you're dealing with group 1 here, if the 15.2 here, the pivot within group 1 becomes a retested resistance, that's confirmation of further downside there. That's just the Dow on the thing last little bit up through there. So if we get this 5 waves down, we'll get an ABC back up and then a test down again. So, perhaps go off the 15.50 for as retested support, and then 15, once the market's into group 2 here, the 65.72 and the 80, then you've got something, well, especially the 15,372 there. Alrighty, Europe's pretty much the same as well. In fact, the count that I had on the FTSE here was the actual correct counts here. So once again, we are looking for a wave 4 to come in play here after a nice long wave 3 here. So let's just see how that sort of pans out there. In terms of actually trading, if the 67.50 becomes the support on here, the tested support. This is the normal case. It will come up and hit it, come back, and then try and get up there. And, you know, that's important. That move up is important, but the retest is more important like this here. We never chase a breakout through here. We always wait for the retest. So that would create the 67.72 there as the next target there. You'll take your profit there. If that became the support, then you would move back in and get to 68. Now, 8 is a profit-taking number, so expect a much larger correction there if that is the case. The Australian market, if I can just maybe just have a look at it on the daily here for 1 second. Look, if the US and European markets are going to go into a correction, then it's likely that that's going to have some pull on us here as well. So we can see that the sellers are in the market at the 52.50 there. Obviously, some reasonably big sellers. They're not chasing the market down yet as such. They're just sitting there with their large orders, and the buying's chipping away at their sell orders there. But that is supply. So we are looking for some type of correction here as a wave 4. This is all wave 3 here. So we've got wave 1 to here, wave 2 to here, wave 3 to here, wave 4 to here, and then we'll see wave 5 up through here once it's completed. The structure within here is also 5 waves in the third wave, the 1, the 2, the 3, the 4, and the 5 up through to here. So this is the first swing that we're looking at through here. Wave 4s can get complicated into triangles and all sorts of double zigzags and so forth. But just drawing this here as an A and a B and a C wave here. And if we look at that on the intraday here, this move down through here is the A wave. This would be the B wave, and then there would be a C wave down here if that was going to be the case. But in terms of trading, we know this is corrective, so we know that high will be taken out at some point. If the 5-2 becomes the retested resistance, then we need to count 5 waves to the downside, and that would be such as 1, 2, 3, 4, and 5 for the completion there, and then we'll see the market move up in this fashion here. That said, we need to trade what we see, and we are seeing. We're seeing rallies in all the bear markets as such. In terms of currencies, the US dollar is a catalyst for all of this. So can't get rid of that there. So we'll just leave that there and bear with me for a moment. But the thing here is that there's a couple of things here. While the market's above the pivot, the 5200 here, it is supported. If we get support on 5230, which is the top of subgroup 1, which would be the 10, the 20, and the 30 here, but support on top of the 30 would see it further to the upside, and then we can count this as an impulse wave to the upside here. But as it stands at the moment, we need to consider this an A and a B and a C of a B wave. So an A and a B and a C for the A wave, the B wave, and the C wave down through here as well. This is unlikely to come all this way down through here, and the reason for that is because the B wave has moved up so high towards the other top here. If it only struggled up here, then we'd expect further weakness to the downside. So there is support there. Support is coming from base metals, lower US dollar, higher base metals, and higher price here. So now we've got precious metals, and we've got currency rally as well through here as well. So so it can be positive. So that's that. Let's have a look at the base metals. Okay, just starting with LME copper. We normally follow the US copper because it's the last closing price. But I just want to sort of point out a few things here. Actually, we do use this now and again. This chart here is a daily chart, so it's copper, and we're looking at we've been chasing this nice Elliott triangle through here, which is always in 5 waves and always labelled as an A wave, a B wave, a C wave, a D wave, and an E wave. Each structure should be 3 waves within this particular triangle here. The 3-wave price action makes it a corrective pattern. A corrective pattern is also a continuation pattern. So if the trend was down and you start seeing 3-wave structures, then once it's complete, it will move further to the downside. So in this move to the downside through here, we're kind of looking at a 5-wave structure down through here as such. Okay, now if you know your numbers, this is 72 here. So that 72 there is really what's going to be playing out across this market here at the moment. So sort of bear that in mind. And what we're looking for here is a 5-wave structure to the downside. So in fact, that's a bit more like that. That would be the 1 and the 2 there, the 3rd wave down through here. This one to here. So my thinking is that, you know, we are in the 4th wave here, and then we'll see a 5th wave to the downside. But we also have to be mindful that that I'm wrong, and that we do and could have a low in here. If that is the case, I would like to see support on this 7,200 on the LME at this point here. But in the meantime, before we get that, we have to toy and play with this structure that's moving up through here, which is this one here. And just looking at copper in the US and looking at that particular pattern through here, that little rally here, this is what I'd thought it was here in terms of an A wave and a B wave into here, and then the C wave up through here. Now that can still be the case, and we're seeing some, you know, type of correction here, but I would need to see first of all the 330 as a retested resistance, and that's not the case. It's a retested support here, so that concerns me that the pattern that we've been looking at here, this little pattern down here, counts very well as an A and a B and 5 waves for the C wave down through here, and if that's the case, we'll make new highs here. So we have to be mindful that we could actually have a low in here, and we've gone over this before, but it is important because, you know, it really affects, you know, the BHPs of the world, the resource sector. So what we're looking for here is that if we do have a little 5-wave structure up through here, then we'll see another little corrective pattern through here, and then a push higher through here. So we kind of need to run with that. And, you know, when we're looking at BHP in Australia, or if I can find the chart here we go here. So right, so with the BHP structure in this one here, we were looking for yesterday, a few times we've been looking at this as 1, 2, 3, 4, 5, because if we get 5 waves here, then after a correction across the 35 here, then we'll see another 5 waves up. Actually, why I'm here as well, I might as well just point out that under the Asx Elliott Wave now, if you want to follow that, I'm doing my best to make an effort to put 2 or 3 charts out each day. It won't always be the case, but I'll do my best. And so yesterday we put out BHP there, and the BHP this is the structure that we're looking at for BHP. If you're interested in trading this here, don't get caught up too much on this Elliott structure here as such, but you know, because this could actually have a much higher high up here or a smaller one. All it needs to do is make above this one here, and because the extension's in wave 3 here, then the wave 1 here and the wave 5 here should be around the same length here. So we're just looking at some sort of correction through here, which wouldn't take a lot, maybe a week or so, and then a push up. So that correction might coincide with the wave 4 correction that we may be seeing in the indices and so forth. But look, we want to see some sort of correction, and we don't know how far it's going to pull back, but we kind of want to be buying in this area along here. So anyway, that's it. So look, anyway, that's the Elliott Wave section is moving along. And look, also while I'm here as well, on the Forex side of things as well, there's a new tab that's opened up through here, and I've just called it odd charts until I find a better name for it. But look, this odd chart section here will just look at odd charts. So looking at you know, whatever it is, the bonds and correlations between markets. And here we got the euro yen here, which is actually a long trade. This is you look for 5 waves up through here, so you can go long on this at the moment on the euro yen. So, you know, and this has just got some Elliott Wave counts for stock here. So it's just an odd bin of charts that that we're putting out through there. So just let you know that. Okay, so look, back to copper, back to the resources. While the support is on 330 and we've got this ABC here, we can expect new highs to move on up through here as such. So we need to we remain positive on resources. Now I should probably go to base metals, but I'll just go to the to this first here. This is oil, and this is the bigger picture here, in big triangle pattern through here. Now the reason, just to show the daily chart here, I did show it last week, but it's just that this top here, you know, is, if you refine it a little bit, is really coming in at 97 and really holding that market there. That E-way here, this E-way has already been done. That was that move down through there. So we're looking further up to the upside here. Obviously, it's got to get past that 97 and find support there. I do believe that will be the case. This move that we're seeing up here on the 2-hour chart, after we've had this ABC correction here, is positive. It's made new highs here and it should continue. There's a couple of different ways to count this price action in here, but either way it's positive to the upside. If we have a look at this little move in through here, because obviously it's going to affect OCH and WPL and so forth, so they will be long to the upside. So in looking at this here, this little move up through here, you can really count the 5 waves here nicely on the 5-minute chart, the 1, the 2, nice strong 3rd wave up here, and the 4th and the 5th up here. So we've got some sort of correction here. Allow that to unfold and do its thing, but once you feel that it's done and dusted, then look for support and look for further upside there up towards the 98 there. Of course, the gold market, just starting here, has moved up strongly overnight with the US dollar pulling back. It's probably not the only reason, but it will suffice for a headline news at the moment. Now, the more important point here is that this move coming down through here is impulsive, and the move up that we're having now is this wave 4 here. Okay, so obviously the main number here that we're working with is the 1400 here, and that's what it's retesting at the moment. Alrighty, so wave 4s can get complicated and sideways, especially if wave 2 was sharp and simple through here. So investigating that through here, it's a little bit unusual to have that wave 4 bounce back that sharply. That's one thing that sort of bothers me about this being a wave 4, but we were expecting a wave 4. We were expecting a bounce off the 1350. There it is, and it's across all markets as well, the euro and the Australian dollar as well. So we really need to see this play out. Yes, it can go higher through here, so we just need it, but we don't want it finding support. So we can expect it to move higher and make a high above the 14 there, but we want to basically see some type of correction across here that fails and then runs out of steam and moves to the downside. What you see here is not what you get up through here. There will be a correction. Markets are trends and corrections of different degrees, and this degree here, that's party over. So it needs to unwind a little bit at this point here. So this is a strong 3rd wave here, so it'll be a 4th and a 5th wave up through here, and that will be the same for silver as well. But it's always good to have a look at the bigger picture here. Obviously the bounce off the major trading level 2 here, and we're always looking for the wave. Okay, so the bounce off through here is also the bottom of wave 3 here, so we can expect it to come back to the wave 4 of 1 lesser degree, which is the medium level here, 25. So in that unfolding in that way through here, we need to consider this as a 5-wave structure up through to this area through here. Obviously it's going to meet supply coming through this little channel trend line through here. So we need to allow it to play out, but obviously this is a 1, and well, it could be the A, the B and the C here, but because of the strong move here, it's more like a 3rd wave here. So we need to consider this a 1, 2, 3, 4, 5. That will give us an A, B, C counter trend, and then another 5 waves up. So wave 4s can get complicated and sideways. I suggest to let this mature through here. Alrighty, let's have a look at FX and the US dollar, which is a little catalyst behind these moves. Looking at the US dollar here, I was looking for this to move a little bit higher to the 85 through here in terms of the structure moving up through here, but the 5th wave has been cut short. So we're looking at wave 4 coming into play through here. Wave 4 can move back to the wave 4 of 1 lesser degree through here, so we can expect it to come back through here. We can also expect it to be a bit sideways and complicated after wave 2 here was simple in terms of an A and a B and a C, so we could get some sort of sideways pattern in this space here before we see further upside. While this is pulling back into wave 4, that's going to allow the other markets such as the currencies and the and gold and so forth to rally through there. But as this moves up through here, then that will be the the end of that. We do expect this to move up, much higher as well through here. So there's going to be placing a lot more pressure on those other markets that we've been looking on the short side. It's just a matter of navigating through the degree of structures that we're trading. So unfortunately, we didn't get support on the 84.50 to get to the 85 in this particular case. So we can expect the wave 4 to play out through here in reverse of this here, whatever time this takes. The euro, we'll have a look at that. We'll be doing the mirror opposite through here. So in this diagram here of the 4-hour chart here, we can see that we're at the low of wave 3 here, and we'll be pulling back to the wave 4 of 1 lesser degree through here. We expected to bounce off the 128. The idea was to cover into the 128 for normal trend traders and short-term traders, and this can move up to the 129.50 area through here. Of course, it needs to find support on the 129 and so forth in there. The other thing that I want to point out here too, I don't think it's the case, but I do need to point it out, is that in this